Hi all, today I'm going to show you a no-nonsense 3-step simple moving average formula which will help you to use them to identify support and resistance levels in Forex. If you haven't already, then make sure you hit that like and subscribe button because I am releasing video content on a regular basis, so make sure you are notified of all of those. I know you're ready to get started. My name's Chris N, the Posh English Trader. Let's go. So, moving averages are known as dynamic support and resistance. So-called dynamic because they are constantly changing depending on recent price action. The main moving averages are 10, 20, 50, 100 and 200. A great way to trade them is to buy when the market dips and meets the moving average in an uptrend, or sell when the market rises and meets the moving average in a downtrend. Have a look at this New Zealand dollar Canadian dollar chart, where the 20 moving average, also known as the MA, acted as support in the uptrend and then as resistance in the downtrend. The question is, how do you know which one to use? Here are my recommended steps. Step 1 is to identify the trend. Moving averages are only really useful in trending markets. When it comes to ranging markets, they really give you very little information, as you can see here. I'm not going to go into detail in this video about how to identify the trend, as I've covered this in the video which is appearing in the top right of your screen right now. If you need 3 ultimate trend identifying tips, then check that video out right now. In order to help you identify the trend, I recommend that you start by using a higher time frame than the one you are planning on trading on. For example, if you are planning on trading on the 1 hourly, then start with the 4 hourly. If you are planning on trading on the 4 hourly, then start with the daily. This will allow you to identify the major trend on the higher time frame and trade with it, as well as avoiding trading against that major trend. So, if we go back to our New Zealand dollar Canadian dollar example, we can clearly see the pair is in a downtrend on the daily chart, which means that when we switch to our lower time frame, we are going to be looking to trade down as well. Which brings us to step number 2. Identify which moving average is acting as support or resistance. So, continuing with the New Zealand dollar Canadian dollar example, now we need to change down to our preferred time frame, and in this case it is the 4 hourly. We can see that the 20 MA is not acting as a resistance level on this time frame. So what we need to do is add the next MA to see if that is acting as resistance. So we add the 50 MA. We can see that this is still not meeting the higher highs and so is not acting as resistance. So now we add the 100 MA, the next MA up. So we have found our resistance moving average. The market has reached and bounced off the 100 MA twice already and looks to be doing it a third time, showing that it is acting as resistance. This third point signals a point at which we could enter the market to profit from the price decreasing. There is one final step I recommend. So step number 3 is to add a second moving average. So, due to the dynamic nature of the market will not always reach and bounce exactly off a particular moving average. Therefore, lots of traders like to use a second moving average when identifying support and resistance levels to create a support or resistance area. Let's look at our New Zealand dollar Canadian dollar chart again. When adding the second moving average, make sure it is the next one up from the one you already have. In this case, it would be the 200 moving average, as the one we already have on the chart is the 100-day moving average. Now, you can see we have a dynamic resistance area that gives us a better indication of where price will rise to before it begins to reverse. The fact that the market has retraced back into this area already suggests that this may be a good place to trade the pair and make money out of it going down. Okay guys, so I hope you have found the information in the video useful so far. If you add moving averages to your strategy as support and resistance levels, it will give you an added guide as to where you should be placing your trades. There is, however, an easier way to identify support and resistance levels, especially if you are just starting out trading the markets. That's why I have put together a 100% free 3-step trading system ebook for you, which will show you how to enter high potential trades that could drastically improve your results with just 3 simple steps. To get this, simply go to poshenglishtrader.com/3 steps and you can download the ebook absolutely free. So again, it will show you how to enter high potential trades that could drastically improve your results with just 3 simple steps, and all you have to do is type www.poshenglishtrader.com into your browser address bar or click on the link in the description below to get this 100% free. So, I hope you enjoyed the video. Don't forget to like, subscribe and comment below with any questions you might have. I will be happy to help. Okay guys, until next time.